Greetings, Don Alexander here with Gene Coda Professional and Executive Search. Today we're going to be discussing the high cost of unplanned employee turnover. Many articles I've reviewed about employee turnover describe various methods to calculate the unplanned costs of turnover to an organization. For example, a study from the Center for American Progress in 2012 cites figures that range from 16% of annual earnings for jobs paying $30,000 or less up to 213% for very highly paid jobs and those at senior or executive levels. Greg Willard wrote an article called How to Really Calculate the Cost of Employee Turnover in 2014 that offered a compelling series of steps to consider in employee turnover costing. And Dr. John Sullivan's Cost of Vacancy Formulas for Recruiting and Retention Managers offers sage advice, including brand image and other aspects of turnover that may be challenging to quantify. Other articles leverage revenue assumptions that are valid but may not account for pre-revenue companies. One of Gene Coda's advisory board members, John Campbell, says that, quote, "Too often companies only look at the cost of turnover through the lens of obvious direct costs and ignore the hidden costs that are the real drivers of unnecessary expense to an organization when talent leaves." End quote. John's experience leading HR and talent management functions of large organizations across a diverse spectrum of industries has given him a firsthand understanding of the critical impact turnover can have on the bottom line of a business. He goes on to say that, quote, "Turnover has an incredible domino effect on costs within companies, costs that can grow exponentially as you look at the impact of just one person leaving a role for which there is no internal ready-now backfill. Understanding the complete picture should be at the very top of every CFO's priorities for controlling costs. The best way to do this is through an honest accounting of the indirect expenses incurred, those things that involve things such as time, lost productivity, lost sales, lost intellectual property, etc." End quote. Having a line of sight into the true cost is incredibly powerful data that can be used to build a business case for programs designed to help enhance leadership competencies and drive employee engagement, which are directly correlated with decreased turnover. Contemplating that a turnover calculator estimator would be valuable for our clients, we next turned to Google to search online for Excel-based employee turnover calculators and found several. While the baseline information seemed reasonable for a quick estimate, some of the formulas used seemed rather simplistic, and others used aggregated formulas whose inputs were difficult to substantiate, so we set about creating our own. What are the differences we incorporated from what we found online? Number one, our calculator offers guidance for data entry, but makes only two commonly held assumptions outside of your own data. First, the model is based on an 8-hour workday, and second, the rate of a temporary or contract worker is assumed to be 1.5 times the departing employee's hourly rate. Number two, our analysis accounts for costing line items of individuals that are involved in the interview and orientation process, as well as the time spent by each individual. Number three, our calculator accounts for the use of temporary or contractor-based interim services while the position is being filled. Number four, our calculator incorporates the potential for relocation costs and sign-on bonuses, which are more common for higher-level positions. Number five, our calculator asks a final catch-all question, which may need to be separately calculated, called extraordinary costs not otherwise factored. This dollar figure accounts for any unique costing to the position that is not previously addressed. When you do the calculation, buckle up, you'll likely be stunned. And please note that additional soft costs, such as turnovers, potential brand damage, are difficult to measure and are not factored into our equation. Therefore, this calculator should be viewed as a minimum cost of employee turnover. To access this blog post, as well as the calculator itself, check out our blog post in the link below.